I want to talk more about data, and now not about the data that the AI tools are using, but rather the data that investors are using when they assess whether they want to invest into a company or a fund or not. Because when there's a lack of data, when there's not transparency about the performance of venture capital funds, it is an obstacle to the investors. And we want to do something about that. So we have put together a new initiative with our partner BlackRock. BlackRock, you probably know, is a big global asset manager. And we have some 1,200 funds in our portfolio and lots of data that we can make available in anonymized form, of course, but we can make it available for the investors, for the venture capital investors, for the big institutional investors like pension funds and insurance companies who are doubting maybe whether the risk is too big for them to take on in projects such as projects in the AI sector or other innovative sectors. And we have supported funds that have supported AI for years. So this type of information we can make available together with BlackRock. And we are calling it Track VC. And it's already now online on a website. And it is being developed and expanded continuously. So this, we believe, will make a big difference for some of these investors that may be reluctant. So we will want to make it easier for the private sector also to take investment decisions. Now, what more is needed to get more investment into the AI sector? Well, there needs simply to be bigger volumes. That is one of the challenges that also the Draghi report that some of you may know about has pointed to, that there are not enough volumes in Europe. We don't have enough investments, also not from the institutional investors I was speaking about before. And we in the EIB group are setting up a program called Tech EU that is going to provide those volumes in the next 2.5 now, so in 2025 to 2027, in the next 2.5 years, we will boost in an unprecedented way our figures for the tech sector and for innovation. Altogether in the EIB group, we will inject some 70 billion into innovation and tech. A broad range of tech sectors like AI certainly, but also quantum computing, clean tech, biotech, security and defense tech, robotics, space. And in the EIF, under the Tech EU program, we are expanding our European Tech Champions initiative. This is an initiative that is targeted at the largest funds in Europe. So we invest into very large funds that need additional investments to become real tech champions, to get over the 1 billion mark of target size of the funds. And by doing that, we also make sure that the tech companies that need serious growth, that needs to become global, that needs to internationalize, that they will have access to the big tickets, the tickets of 100 million euros and over, that will allow them to do exactly that, to grow beyond also the borders of their own country and beyond the borders of Europe. So with the Tech EU program altogether, we are counting on mobilizing some 250 billion euros in the next couple of years. And with ETCI, we have already put 2 billion into some 10 of these very big size funds to allow them to become mega funds. So we are going for faster, simpler, and better financing. We're hoping also that our shareholders, our mandators, will help us in making our financing and the way to our financing. So when somebody applies for financing from us, they have to get much quicker responses. And we also want to increasingly bring in the private investors. The ETCI is one of the ways to do this, so we will take some of the risk for the private investors that can then, together with us, invest into the mega funds. And in general, I think it's important that we think about how can we incentivize the private investors better. We're here in Luxembourg. Luxembourg has recently announced a new startup program. And among many other good proposals in this program, there's also the proposal to give tax credits to taxpayers who want to invest into young, innovative Luxembourgish companies. And these are the things, one of the things that we need more of in the EU. We need the member states to incentivize their investors, the investors in their countries, much more than we're seeing now. Let me just give you an example. In Germany, we have about 47 billion of startups with unicorn valuations. 47 billion, and about 4.7 billion of that, so about a tenth of that, is held by US pension funds. And in contrast, the German pension and retirement funds hold only about 95 million of that. So you can see there is really a way to go, even in a big country like Germany. And this is one of the things that we also want as a public investor to incentivize the pension funds, but we need help. We need help from the EU regulation. We need help at EU level also for the Commission to look into, could we lower the capital charges for these pension funds and institutional investors? Would that help? If they didn't have to put so much money aside under the EU legislation when they invest into the most innovative companies, would that incentivize them? This is one of the things that we are discussing also with the Commission, and that we want a serious discussion about whether it could not be easier for Europe to get some of that pension fund money, insurance company money, and in general private investor money into play for more productive investments. Now, artificial intelligence is really changing our lives, from the smallest daily tasks to the biggest geostrategic issues. And it has potential to reshape our economy like the Industrial Revolution did, and like the emergence of the internet did. But we need really to be able to reap the benefits of this AI revolutions in Europe. The bright ideas must find finance and become new solutions to the many challenges that we have. And we have boosted and we have adapted our services in the EIB group to be able to contribute to doing exactly that. So I thank you for having listened, and as they say here in Luxembourg, let's make it happen. Thank you.